clearly it's no longer news that energy, or rather oil prices are down to a 16-month low. And the key question, of course, is to what extent is this hurting Nigeria right now? Clearly, oil revenues are lower. The Naira has come under some pressure, but where else are we seeing some pressure?
Well, basically, it is true that oil prices are looking south. And I would like to tell you that, especially when you see recession like this in Europe, and you see that China and the US is not growing at the rate, it is typically expected that what is happening now will happen. And I think the issue will be that it will therefore lead to a lot of cutback in investment, especially in the upstream sector. And I believe also gas infrastructure cutbacks will be encountered. And as you see all of this happening, you'll see that it will affect all operators in the upstream sector. We also see that the price movements downwards will affect stock holding risk for the downstream sector as well. Indeed. This, of course, will affect revenues, national revenues, and therefore affect the economy materially if this continues below $72.
All right, Samuel, you've clearly highlighted several risks there. But before we get to that, let's talk about the, if you like, the most critical risk of that oil price coming down to $72 per barrel, which, of course, is the baseline for the 2012 budget. Your thoughts on what that would mean if we see that scenario?
Sorry, come again.
I want to get a sense of your thoughts on if we see oil falling back to $72 per barrel, which is the benchmark level for the 2012 budget. Okay. What will that mean if we see that?
The truth is that if crude oil prices go below 72, then that is the benchmark for the budget. What it means is that revenue for the nation will go down. It also means that the government might be unable to meet its joint venture cash calls for JV operations. Clearly, everything that affects the budget will be affected. What you also see is that the government has been very used to the idea of excess crude accounts being buoyant, but if this is cut out, of course, it will require a significant amount of management from the government to contain this. Right. So all of these are real risks facing the Nigerian economy. Okay.
Talk to us about the dynamics in terms of the participation of the international oil companies and, of course, the locals. Clearly, over the last few years, we've seen a shift. We've seen more of local participation and less of the international oil companies.
Okay, well, one of the things that, there are two things that affect revenues. One is production and the other is price. What we've been discussing is the effect of price. Now, one of the things that happens in this industry is the rationalization of your investment in your various assets. Now, what you will then see due to this, the divestment of IOCs, is that you will see a lot of these local who have single blocks investing more aggressively into their fields. And I believe that that would tend to show up production and try to bring a balance to all of this effect. But I do not see that this will be strong enough to resolve the economy issue if prices continue to go down, down south, below 72.
Well, of course, another reason we're seeing the decline in international oil companies' investments in Nigeria is the whole issue of the petroleum industry bill, which obviously has been dragging for the most part of the last 4 years. But I want to move to another point, which is this power reforms and somewhat disturbing news about the World Bank's partial risk guarantee not being in place, which of course has been very critical to the setting up of the bulk trader and the whole infrastructure for the power reforms. What are your thoughts on this point?
Well, the partial risk guarantees by the World Bank is significant, and it's significant for the entire power reforms to go through. Investors into this sector are looking very deeply at that and are relying on that. Investors and banks that will be putting debt behind it. I think that it is unthinkable that the World Bank will not come through on this. I believe this is just a temporary delay. I expect that soon, before the bid rounds are through on the energy, on the power sector, I believe that the World Bank will come through on it. Otherwise, the entire reforms will have a pushback.
What I'm hearing, Samuel, is that the reason they're not putting that guarantee on the table right now is simply because we haven't reviewed, or should I say effectively reviewed, the tariff structure for Nigeria's power sector. Would you agree that that's the issue? Because I did hear that last month this was supposed to take off.
Well, that's an issue, but you know, all of these issues that have been raised up in the power sector are being resolved step by step. Initially, it was a gas issue, and MITO 2 comes out with a gas regime that looks a little bit more attractive. Now you also have concerns about payments for gas supplier, which NEC has come out to give guarantees to say, look, this will happen. I do not think that these issues that are raised will continue. I think the whole issue of tariff also is being looked at, and just recently there was a somewhat an increase in the price benchmark for
has that effectively happened, though? I know it was in the plan, but has that effectively on the ground from what you're hearing?
I think it has happened.
Right. Well, you know, for me, when I look at the entire process, it's a bit disappointing how it has dragged on for a while. And I want to get a sense from perhaps the people you're advising or you're involved with. Do you see any fatigue from investors with this process? Because we know that privatization of this power company should have happened last year.
Mm-hmm. Now, I mean, yes, it's taken a long while for all of this to happen and come true. But from my perspective, from my point where I deal with people who have exercised, are shown interest in investing in that sector, I think as each hurdle is crossed, you then see the excitement and renewed interest. And that's what we're seeing and feeling from the banking side right now, because there is strong interest in participation in the power sector and in the power reforms.
So you're saying there is that positive sentiment for the reforms now? There's that view that we're going to get it done this year?
I think it's strong. Preparations are in top gear, and I have the sense that we should close out on this year.